with Cincy and Breon Price. Also with Cincy, we are your mortgage loan officers, and we're here to be resources for you guys. Should you have questions, this market is ever changing. There's new developments coming out every day. So we just want to give you guys a quick rundown of some products that are popular right now and some other market updates.
I
Breon?
love it. Yeah. So, like Lauren said, we're a couple things that we want to hit on real quick. I know buy downs was something that was super popular, back in the past. It's now coming back. Lauren, I know you've been able to do a couple of them. I've been able to do a couple of them. Explain it to us.
Yep. So this is a good option for someone that might be worried about what their monthly payment is going to look like given the current interest rate. So how this works is the first year, the rate will be 2% lower than what it is currently locked at. And then the second year, it'll be 1% lower. And then that third year, it'll be back to the original rate. So this helps save clients money in real time. And a lot of times I feel like it's a lot more beneficial to use seller concessions towards a buy down because it's a lot more impactful as opposed to, using those seller concessions towards, taking the purchase price down $3,000 or something. It's a lot more beneficial to use as a buy down, I'd say.
Yeah, absolutely. It's something that's, rather than negotiate, a $5,000 reduction in the price, keep the purchase price the same, and then offer the buy down. And now you're going to see a monthly payment savings that could be two, three, $400. It just depends on, how low we can take the rate. Right. So it's
Mhm.
also a great option for sellers. If you have a listing where it's sitting and you're thinking about doing a price reduction, offer this in the listing comments. Let them know that you have special financing available that could take the interest rate down into the fours or the fives. That should help draw that attention. So that's a cool program. We have one-time close for new construction. That's something that we do a ton of down here in Cincinnati. I know our Cleveland and Columbus realtors, we really want to show you guys this because I think it's a great opportunity for you to land a builder and for us to land a builder. Builders are amazing clients to work with because they build a lot of homes year over year. So it's not just a one and done. And then, the other one that we wanted to discuss on real quick is DSCR. DSCR is an investor special program. So your investor clients out there that are buying homes, that may not show a lot of income on their taxes, that type of clientele, I think we all have those. Where they just write off quite a bit. This is a way for us to approve them. All we're really looking at is the cash flow of the property. So reach out to us on those. We can dive into each one of those three things, very specifically with you if you have clients that would fit that. Next thing on the list, MBS Highway, and then just overall market news in general. So as we do these weekly calls or videos, we definitely want to keep you guys updated on kind of what we're seeing with the market. Obviously, over the last couple of weeks, we've seen a steady trajectory up with interest rates. Um, you know, how high they go up, a lot depends on that. I think credit score is going to play a huge role into that. Down payment's going to play a huge role. Don't just take the news that you're seeing on Facebook and CNN and Fox and all of those news sources. Face value. Okay. I think, Lauren, and feel free to chime in, but, we're not seeing interest rates in the eights, in a lot of situations. We're not seeing them, even in the high sevens, right? I mean, I sold a 6.99, interest rate, on Thursday or Friday. What are you seeing?
Yeah, I'd say around mid sevens probably, and it just depends too. Sometimes we'll have clients who would prefer a higher interest rate and to maybe get a little bit of a credit back towards their closing costs if that's what's important for them. But overall, I think that we're still super competitive, and I have not locked the rate in the eights, so I'm very proud of that.
Absolutely. It's you're going to see a lot of places, a lot of banks push their rates up in the eights. You're going to see huge closing cost numbers on deals, for banks to keep keep their rates in the sevens. Knock on wood, we haven't had to experience any of that on our side. I think we can be a great resource if you have a client that has talked to somebody and the interest rate was in the high sevens or eights. kick them over to us. Let's get a second opinion. Let's see if we can, maybe save them some money, which is going to allow them to either have a cheaper payment or it's going to allow them to purchase a more expensive home. Cool.
Yeah, and something I've noticed too is when like I got sent someone last week and their rate was higher, but not just the rate, but their monthly mortgage insurance was like $40 higher than what we were quoting out. So that can be a big game changer too, not just looking at rate, but paying attention to the mortgage insurance as well.
And do you know why our mortgage insurance is cheaper, Lauren?
Yep, because the primary lender that we use, they actually own their own private mortgage insurance company. So they're able to offer it to us and our clients at a much lower rate, which is super helpful.
It's huge. I mean, when you can control all of the factors in play, it allows us to, kind of pick and choose what clients we want to work with. It allows us to really reduce that PMI down, which ultimately is going to save your clients tons of money on the monthly payment. Last thing. So I think we might have hit on this, but as interest rates stay up for a little bit longer than I think what we all expected, you're going to start to see Congress and the government step in and try to, help home affordability, right? So, if we can't control the interest rates, and they're staying up for longer, than what we thought, then, one of the things that we can do is start to lower down payment requirements. So this is not out yet, but we do expect it to hit at some point in 2024, FHA going to no money down. Okay, so very similar to a USDA loan. If you guys have done USDA, that's a government-backed loan as well. They don't require a down payment. It's 100% finance. We could see FHA roll out something very similar to this. I think this would be an amazing step in the right direction. A lot of those clients that are doing FHA, are stretching to get to that 3.5% down. Hopefully, this rolls out. It's rolled out the right way. But yeah, this could be something huge down the pipeline.
I'm looking forward to it. And I think more realtors are being, more open to FHA loans too, just because they realize like FHA loans are great loans. I feel like they kind of have like I don't know, not the
A
best like
stigma.
reputation. Yeah, for being, a tougher loan, but really on our side of things, everything's the same. So we can still close an FHA loan just as fast as we could a conventional loan. So
100%. I think that the FHA with a lot of lenders and banks out there, it's a totally different underwrite. It's, it goes into, a queue that gets hit on only on Thursdays or something. That's not how it works with us, guys. We have the same set of underwriters that review all of our conventional VA, FHA, jumbo. So, we can close an FHA loan just as fast as we can close a conventional loan, which is right around 11 to 14 days. If you have any clients that you think would benefit from any of this information, please let us know. We're here to help and have a great week. Thanks, guys.
see ya.